So welcome along tonight. For those who don't know me, my name is Mcintyre, CEO and founder of the 21st Century Media and Education Group. And tonight we're happy to share with you very briefly before we give you copious amounts of wine and have a cocktail party, is hopefully share some things with you that may be of interest. I know some of you are familiar with land banking, some of you have no idea what that is, so obviously we'll talk about that tonight, and I'll try and share it in the simplest terms possible so you understand it, because generally we don't do anything in life unless we understand something. If we're not completely clear, it leads to procrastination, and often opportunities vanish and we end up being, I wish we had bought some land 10 years ago or 20 years ago, and we don't want to be in that situation 10 years from now. I'm not just a commentator. There's a lot of commentators out there on property or the stock market. I'm also someone that's been an active investor for several decades in the property market, so I can speak from some of my own personal experience. There's a lot of people that are the naysayers about Australian property. If you read the papers, you'll see there's apparently the property market's going to crash. If you turn the next page, apparently the property market's going to do really well. The average person, how they're meant to decipher what's real and what's fiction and what's just, I guess people just trying to grab headlines. I remember back in 2008, the global financial crisis, people such as Professor Stephen Keen, Harry Dent, US economist, and some of the local professors were saying Australian property market's going to crash 60% because of the credit crisis. I was on radio saying I disagree. I had the opposing view, and many other property investors did as well. And I said it's unlikely that's going to happen. And of course, it didn't happen. We did see some pullback in property prices, but unlike the stock market, etc., didn't crash. They were saying, well, the US markets crashed, the UK property markets crashed. Of course, Australia will crash. Well, that's not necessarily true. So no one actually has a crystal ball, not even Warren Buffett, to be able to predict what's going to happen in any market in the future. But what we do have, hopefully, is a thing called common sense. And if you have common sense, even though it is very uncommon these days, but if you actually have common sense and understand a few basic fundamentals I can share with you in 5 minutes, you will actually know, if you've never touched property before, you would actually know more than most so-called commentators on the property market, those ones and professors and academics that may be intelligent to some degree, but they just don't have the real life experience. So why was I not concerned that property market was going to crash back then, and what are my views now? Well, one, I knew this. The US property market was there an undersupply of properties being built in the US or an oversupply? Massive oversupply, because pre the credit crisis really was an American subprime market crisis where they were just basically loaning money to anyone. You could be a homeless bum on the streets and they would have you sign a document and give you a new house. You don't have to be an Einstein to figure out that sounds good to get the numbers up, but when that homeless person can't pay the mortgage, well, someone's going to lose their money. Does it make sense? And effectively, that's what was going on. So they still had a growing population, but they had a massive oversupply. In Australia, in the credit crisis, did we have a oversupply of houses or an undersupply? Undersupply. So an undersupply would suggest that the property market shouldn't crash. Might pull back a bit, but it shouldn't crash. What about population? Did Australia have a small growing population, declining population, or a rapidly growing population? Yeah, if you're not sure, just take a guess. 50-50, you're probably going to be right. But those who know would know that we had 300 record high immigration back in 2008. 330,000 people more added to Australia. That's the size of Canberra being added every year. So rapidly growing population. Australia is a fast growing population. Therefore, just those fundamentals, fast growing population would generally see prices rise or go down. Rise, or at least put a floor under. If the supply is not enough houses being built, that would put a floor under it or push prices up over the long term. So therefore, I and other investors were able to be bullish and say we think long-term property will do quite well. So we fast forward about probably 2 years ago, 18 months, 2 years ago, I set out to my investor clients. I said, I see another property boom coming in Australia. Now, 2 years ago, most of the sentiment was the opposite of that. You know, property prices are too expensive, not going to happen. Why was I one of the few that were able to predict pretty much accurately there was another property boom coming? Once again, simple fundamentals. Fast-growing population, chronic undersupply, and at that time up until then, the banks weren't lending a lot to developers. So that would suggest that there's going to be a pent-up demand. But then something else happened. What happened in the last few years? What happened to interest rates? They go up or down? So if they go down, that would support property prices to go what? Generally up, or at least put a floor under it, okay? So if we understand those basics, we can figure out that what's likely to happen to property. Now, obviously, the property market varies from capital cities. Sydney obviously has been the biggest boom and recipient of fast growth in the last 2 years, followed by Melbourne. Melbourne's always been a very good property market generally, but because of those demands. Now, am I bullish today if you said, okay, well, am I still bullish on Australian property over the next 10, 20 years? Would you like to know my answer to that? Because some of you are like, well, I'm thinking about buying property, or I'm thinking about doing something, but, you know, I've read in the papers, you know, is it a good time? Well, there's always different markets to invest in. There's always different suburbs, like in Melbourne, for instance, that have more demand than others. Like, does Toorak have a lot of demand, yes or no? Does Albert Park nearby here have a lot of demand? That's why you see houses that are so overvalued. Like the rent is so, but because people want to live in those areas. But they're not the only good area. A lot of people are priced out of those markets. So different suburbs will create different demand, okay? So where do I see it? Well, what I would do is crystal ball. What's Australia's population likely to be in the next 10, 20, 30 years? If you know that, I was invited to speak to Parliament in New South Wales last year to share my vision of Australia to 2050. Some of the statistics I provided was that cities such as Melbourne, which is about 4 million people today, would be 8 to 9 million people by 2050. So if you think it's crowded in Kingsway right now, you think about that in 2050. 8 to 9 million people. So rapid growing population, what is that going to do to Melbourne property prices? Send them through crashing, or likely to continue over time to rise? Does it make sense? Would you tell your kids, look, don't buy a house in Melbourne or wherever today, wait 15 years, it'll probably be cheaper? You'd have to be pretty gutsy to do that. Now, no one knows, but if those fundamentals don't change, then you can be pretty bullish. That doesn't mean that you can't pick the cycle and you buy regardless. You can be more sophisticated than that, but those fundamentals, fast-growing population, if it maintains an undersupply of property, then those two things will help maintain or grow property prices long-term. Does it make sense? Now, we don't necessarily control the interest rates or the economy. Those things will have factors on that. But here's the other thing that I know, and I think this is critical, even the strategy we're going to talk about tonight, is what I also know is that they say property is safe as houses. True? You've heard that saying before. Well, you know, property is actually safer than houses. Property is as safe as the big four banks. So here's what I find funny. Some people pull their money out of the property market, freak out and put it in the stocks. And they'll buy bank shares, okay? Which is generally good shares to buy, okay? They're generally good at making money. But it's quite ironic they do that. If they don't believe in the property market, why the hell would you buy bank shares? Makes sense? Because I trust the long-term property market in Australia to perform. Why? Because if it doesn't, if there was a major crash, it's not our problem. Whose problem is it? It's Westpac, Commonwealth Bank, ANZ, etc. Makes sense? That's their problem. Why? Because they control 80 to 85% of the home mortgage market. So do you think banks are pretty smart and have a lot of analysts studying everything about the property market and its future likely growth? Yes or no? Absolutely. Are they actually able to manipulate the market? Yes or no? Yes. And would they do that? Yes. For instance, are they able to increase demand for property by making it easier for you and I to borrow for property? Yes or no? And they are actually starting to do that right now. They're able to do that. Now, the Reserve Bank doesn't like that and they keep them quiet. But by making it easy for you and others to borrow for property, that means more people can buy property, pushes prices up. Are they able to then turn that supply off and make it, if they're worried about a bubble, can they turn the supply off and make it harder for you to borrow? Yes or no? Yeah. Of course they do that. Can they also turn the supply on and off for home building, such as developers? Yes or no? Yeah. In the credit crisis, I was worried it could have been a crash, so what do? They turn, there was already a chronic undersupply still, they turned the supply off to developers so developers couldn't get money. So they couldn't build too many houses. Therefore, that put a floor under the market. Does that make sense? If they want more right now, they're able to turn it back on. But also there's something else affecting the market now where they're having a little bit less control because all these Chinese and Malaysian property groups coming in here and they don't care about borrowing from the banks. They'll just pay cash for buildings. Does it make sense? So long term, what I'm saying is that I believe property still is one of the greatest investments Australians have. We're very lucky we live in a country where the average person can start out and actually become a self-made millionaire over time. That is what's great about our country, and I think we'll continue to see that. It doesn't mean it always will go smoothly. It goes in cycles, and we have to be prepared for that. And I'm not just saying that because I'm a property investor. I'm also a property developer. People say, oh yeah, well, the property spookers, of course, are going to say that. I was, if you read the Fin Review recently, I was, they said an article where I come out very clearly saying, look, I would be concerned about certain segments of the property market. In particular, I warned, and the Reserve Bank Governor agreed with this as well, is that I warned people that I would stay away from certain segments. Would you like to know what those segments are? Just, you're going to save yourself some money. I was talking to a friend at my party in Melbourne on Sunday, and they live out in East Bentley. Russians, of course, and they wanted to move, young couple, doing well, and wanted to move and get an inner city Melbourne apartment, and they wanted to know my opinion of that. And what do you think I said? I said, if you want to live in the inner city, rent, but don't buy. East Bentley, if you want to buy, great suburb. Keep buying out there. That's where you'll make money. That's where you have built up your equity. Don't cash that investment in, or your house, to go and put it in an inner city apartment. Right? Inner city apartments are great to rent, okay? Rent them to never buy them, okay? Why? Because what we're going to learn tonight is that the money is made from land content. Does that make sense? Land is what makes us money, not the house. The houses go down in value. It's the land content. High-rise apartments in inner city Melbourne, which is flooded right now. There's 36,000 apartments already approved, not built, that will be built in coming years. Okay? Now, sure, a lot of people want to live in the city and there's a demand for them. But the reality is, if you buy one apartment in a building with 1,000 apartments or 100 apartments, you have competition on your doorstep. If someone, just one person, has to sell cheaply because they're in trouble, that devalues your building. If you go to sell or rent, you're competing against all these other people. You'll notice inner city apartments and South Bank and around here, the price to rent them has come down dramatically in the last few years. It's a great time to rent. You can rent a penthouse for not a lot of money now, less than you could 5 years ago. So rent these. So if you're wanting to retire, move to the city, CBD, invest your money elsewhere, and then you can afford to rent something really nice that's cheaper than what it would be to own. You'd never want to own those. You pay a lot of body corporate. They're never going to go up in value. I guess Dockland's risen in value. Have they doubled in the last 10 years, those apartments? I don't even think they're above, they're probably equal to what they were 10 years ago, if that does make sense. So they're the worst investments. Have you ever been offered a free flight to the Gold Coast to buy high-rise holiday apartments on the Gold Coast? They're the worst investment in the country. That's why you get a free flight, okay? Never touch that stuff. Novice investors make some bad mistakes. Just don't touch that stuff. Why? It's dumb. Okay, you can do much better. Why? Because you want land content. Now, if you want to jump ahead of all this and be more sophisticated, then what we're going to talk about tonight is probably the most accelerated way you can create wealth in this country that I know of. If I knew of a faster way, I would happily share it with you. My earliest mentor said, Jamie, I'll teach you what it takes to be financially successful. And one condition is that you share that knowledge. So any strategy I've done, I've always shared it with others. Now, some people come from the world of scarcity and they believe, well, if someone's made a lot of money, why would they share the ideas with others? Now, in a lot of businesses, they won't share it, trade secrets. But if you come from the world of abundance, there's plenty of money in this country, plenty of money in this world, And can you get enjoyment from seeing other people do well? Yes or no? Yeah. Does it hurt me if you take an idea tonight and go and make $500,000 or $1 million? Does it hurt me? You'll probably shout me a beer sometime. Is that true? Okay. It does not hurt me. I don't care. Okay. I think, you know, the more you give, the more you get. That's my motto. Fair enough. Okay. But if you live in a scarcity world, you want to hold on to everything and don't let anyone know. You know, I don't think that's the way to live. Fair enough. So there's enough money for everyone to go around. If we're smart, willing to take a risk, but when we see the smarter we get as investors, the less risk we take. You know, hanging around people like Sir Richard Branson, these billionaires, what you learn is that people go, oh, they made their fortune by being, you know, big risk takers. The reality is, the more wealthy a person becomes, the risk level is generally coming down. They get smarter how to make a lot more money with less risk, okay? And I know for myself, now that I'm at the ripe old mature age of 42, my risk tolerance is less than it was, say, when I was 32. Definitely less than when I was 22. Who would relate to what I'm saying here? Okay. Why? I guess we just have different stages in our life, but we also get smarter how to maximize our upside and minimize our downside. The one I want to share with you tonight, I think, is one of the most brilliant inventions there is of maximizing the upside and minimizing the downside. And that's what you want to do as a smart investor and eliminate a lot of the headache. Does that answer the question on my views on the property market? Yes or no? Very good. Once a year I do a top 10, my top 10 investments. If you're on our database, you know, you'll get this, you'll get a couple of emails a year. And this changes every year, but you'll notice the top 5, there's something common there, is that they're all property related. It hasn't always been that case, but I'm very bullish on property. You know, I wrote an article which is about to be released recently last week, saying if you're haven't exited the stock market yet, I would be planning most investments get out of the stock market. It's so pumped up with liquidity. It's on life support. You see what's happening in the US market. It's on life support. They've pumped so much liquidity in the market, and it's still barely, you know, it's so overvalued. I would buy US property any day before I buy US stocks. This has probably been the most common way. This is what I was taught to become wealthy: buy a house, and 10 years later it should have doubled. That's what I started doing, you know, when I first learned, and that's great. Good, solid strategy. Who's done that in this room? Many of you have probably done that, bought a house, bought some properties. Long term, you do well. You can't buy a house and then check it 2 years later and it hasn't gone up and go, this doesn't work. It's a 10-year plus plan. Does that make sense? Wait, give it 10 years. Ideally, if you've bought in a good area, should have doubled. Fair enough? And who's known that to be true? Who's had that experience with your house? Check your house now, what it was 10 years ago, 20 years ago, 30 years ago. It's hard to believe. If you don't believe in property, study the history. Go and see what you could buy houses in Albert Park, Toorak, any suburb 10, 20, 30, 40 years ago, and you go, this is unbelievable. Why didn't everyone buy a house? Well, the smart people did, okay? Land banking, we're going to look at why that's number one, why I put that to number one. Because what we've effectively done is be able to take a strategy. It's not new, it's been around for a long time, but it's only really been around for very wealthy people. It hasn't been a way up until recently, in recent years, to innovate that strategy where it becomes much simpler, where the average person can do it, okay? And we like to take sophisticated strategies and make them middle-class strategies. Does that make sense? Land banking, most people are familiar with, is basically all these suburbs around here or anywhere in the cities were once farmland. Is that true? If you want to see land banking at its purest, just go out to some of these suburbs. I'm still learning my Melbourne suburbs. I know where Tullamarine is. Is it Tarnegi? Where a lot of new Wyndham, where a lot of these new housing estates are. You actually can, I mean, I was out there a couple of years ago and there were farm paddocks in like Wyndham Waters or whatever, and now all houses. And you can actually sit there and see the farmland bordering the houses, the housing estates, and they're actually getting changed into housing estates. That's land banking at its purest. So that land was once farmland. It was then rezoned by the council into residential. The price would have went through the roof 10, 20, 50-fold. Then developers buy it either earlier or buy it off once it's rezoned, whenever, and then they'll start planning to cut it up into housing estates. And if you're a home buyer, you'll come along and pay $200,000, $300,000, $400,000 for a block of land that once might have cost $100 for that lot of land. Does it make sense? That's how much value has been added to it. So that's what land banking is. In the past, you go, well, that's great. Should I just go and buy some farmland around the outside of Melbourne or the outside of fast-growing regional cities and sit on it for 20 years and I'll become a mega millionaire? Well, there's a fair chance you would, okay? The challenge would be most people can't, one, afford to pay millions of dollars for farmland. Some can. Two, a lot of people don't want, the challenge is the banks will only loan you 60% generally, 50, 60%. So you have to put a lot of equity into it, a lot of deposit. The other issue is you have to pay the interest bill and you've got no income other than adjustment on a few cows or something. So a lot of people go, well, that's not really exciting. I'm better off having a house. I can rent it out. So that's why most people don't do it. Don't have the money, or it's a cash bleeder and you've got to bleed cash for 10, 20 years. Then you get to make the big pay dirt. I'll give you an example. There's some, it was in the paper 2 weeks ago, Sunbury. A family bought, I forget the figures, but it was, you know, 800,000 or something they paid for their land. 5 families. And they, the land's now worth $70 million. Okay. There was another story of a few years before that. They paid $200,000, 4 families, I think, at $200,000 each, 10 years ago, and then they got offered $47 million. Okay, by developers. So you can see the massive uptake in these things. So what you can do though, the way that we've been able to do it largely, and it's not just us, it's now becoming more common, is to make it more simpler for, I guess what we're talking about is, who's familiar with the word pre-IPO in the stock market? Pre-IPO, you get in before the company's listed. It's effective. Another word to explain land banking is probably pre-IPO for land. You're getting into the land before it's rezoned and before it's developed, DAs are approved. So you're getting at the wholesale rate, so then you get that extra uplift. Rather than coming along, you can just go where you're buying now, the buy and hold houses, you're paying retail price for the house and land. Does it make sense? We're saying, well, let's get in before that stage and buy it here, and you get the uplift. Okay, and then you can sell it to the home buyer. Put a house on it and sell it to the home buyer, or just sell the land, or flip the option contract as we look at that. So I guess what we're looking at is how do you lock in the land, lock in land prices at today's value, but have, say, 5, 7, 10, 15 years, depending on the length, what we call options, before you actually have to pay for it. Does it make sense? That's effectively what we're doing. The other benefit I mentioned before is that the good thing about, so what we're going to use is a thing called options. And the rich control assets, don't necessarily own them. So what you can do, instead of having to go out and borrow to buy the land, you can purchase an option agreement which gets you the right to control that land for a lesser fee for X period of time. So an option contract might be 5 years, it might be 10 years, it might be 15 years. Ideally, the longer it is, the better, because of more potential growth. So you're locking in today's price with an option, but you don't have to pay for that land and to the end of the option contract. Who's following what I'm saying here? So it's a pretty simple concept. Therefore, you don't have to pay, you don't have to borrow. So why I like this strategy, if there is some volatility coming in the property market, especially there will be in inner city Melbourne, then a strategy, you're thinking about a property strategy here where you don't have to go to the bank. Who likes the idea of that? You don't have to borrow money. Who likes the idea of that? No interest repayments. Who likes the idea of that? No holding costs. No need to worry about a tenant. Removing all those headaches. So we're taking the upside. Ideally, the land will double in the next 10 years, say. Often land actually statistically grows faster than house and land. So let's say it doubles in. So let's use an example. Let's say you're able to option a lot of land that's at today's prices. Let's say it's $150,000. In 10 years' time, we expect that to be worth what? Take a guess? 300, so. In 10 years, let's say it's a 10-year option, then we have to pay for, we don't have to, but if we want to buy it, we now get to buy it, but do we pay this price or this price? You pay the 150 because you locked in the price 10 years ago. That's if you want to buy it. What's also, you've got no debt, You don't have to go to the bank, no interest cost. So the great thing is with an option, you know, there's different types of options, but we call a call option, which most of them will be, is that you're not obligated, so you can just walk away. You don't actually have to buy the land. But of course, if it's risen above 150,000, you'd want to buy the land. Is that true? Or you go, well, you know, is it easy to buy the land then? Well, if it's worth 300,000, you have 150,000 profit, which is also equity, so it's easy to get a 50% lend to buy the land if you wanted to. So you buy the land, then what you could do is sell the land, just put it up to local real estate agents because there'll be people buying home buyers, or could you put a house on it, yes or no? Put a house on it, probably be the smarter way because that'll increase, you'll make a lot more money out of that. House and land together is worth a lot more. Then you can either rent it out or sell it. Or thirdly, if you want to be really smart or sophisticated, you can unsell the option to someone else and never have to buy the land. That's another way you can profit from it as well. Okay. Now I know that's a fair bit for in a nutshell, but who's following what I'm saying here? So really, it's actually fairly simple, but it's considered a very sophisticated strategy. The use of options has made it far more simpler. But yes, what's the catch? What's the issues? How do you make this happen? There's a few things we still have to overcome. We've been doing this, you know, as a project. You know, I'm involved in many different companies, but being a property investor for about 4 or so years. As far as finding for our investor clients developers that would agree to issue options. Because if you go out there tomorrow and ring Meriton or some of these big developers and go, I was at this seminar last night, this Mcintyre guy, he's pretty bullish on the Australian property market, and he taught me about options, and I heard you've got some land. I want to option a lot of land. I'm not going to pay for it now. Don't want to pay for it 10 years because I want to make that upside. Can I do that? You know, what are they going to say? Yeah, they're going to one. They're not going to share with you. This is how they make money. They're not going to let you in a part of the pie. Okay. Most big development companies are listed on the ASX. They get money off you as a shareholder, so they use that money to do this and pay you 4 or 5%. So they're not going to let you make the profit from doing this. Okay. Some developers will though. If they do, very few will, and they'll only do it generally in the early stages of a development. It's another form of financing for them, and generally in the early stage development. So to get decent quality options on land that's likely to grow fast is not easy, okay? But what we did in our property division starting 4 or 5 years ago, we would go and negotiate for our clients and find developers that would agree to that, okay? And then eventually we said, well, really, why should we go to other developers? Why don't we just become the developer anyhow? Because, you know, our clients would rather deal directly with us, and if we're the developer, we can control the entire process. We're not at the mercy of a developer not delivering, okay? Because is it likely that some developers don't deliver, yes or no? In the building industry or development industry, yes, okay? So we don't really want to have to deal with other developers that might not deliver, so we started being our own developer. So we've you know, acquired numerous sites, and we plan to acquire many more because I'm very bullish, of course, and I believe that, you know, I know with the fast growing population that land over the next 5, 10, 15, 20, 30 years, literally it's a gold mine. It's a gold mine, okay? So please don't tell everyone about it, okay? So just going back to that, so we'll cover in a moment a few different developments, and of course tonight, most of you here, one for some free wine, true, and also to find out about our latest development, which is meant to be top secret, okay? But if any of you know where it is, well, that's clearly wrecked the secret, okay? But we'll see if some of you are guessing if it's right. But we'll share with you our latest development we're really excited about. And really, I didn't think land development could be so much fun. I mean, I'm involved in a lot of things, but I think it's so much fun. I love doing this. I love buying land. You've got to be a visionary. In other words, to see the value in land bank, you've got to be able to see a piece of farmland and be able to see what that can become. And not everyone can see that, but if you can see that, it's amazing what can be done. And I like creating things, and it's a really fun hobby. Okay.
A question that really commonly comes up, a lot of people, I don't know if there's anyone in the room, but has a lot of money sitting in super, and they want to know if they can do things like land banking. So could you touch on that, Jeremy?
Actually, I can't.
Yeah, okay, thank you.
No, I'm not an accountant or licensed financial planner, so I can't advise you whether you can use your super. But I can share with you that I know other people have used their super money for acquiring options for land banking, and I have myself as well. But I can't give you advice. You need to seek independent advice on whether you can use your superannuation to do this. But this sort of investment strategy is not something where you're going to invest and you're going to make some cash flow next month. This is a long-term investment strategy that's sort of 5, 10, 15 years. But we know to be true that all wealth is really created over time, is that right? And it's generally created over property, or really if you understand property, is created from the land increasing in value underneath the property is where real wealth is being created. So you would know countless examples. Harry Triggerboff made 200 million last year on the side from just the increase in the land that he holds in just 1 year. Okay, so a lot of people make some big money out of this. We're saying, well, let's not be greedy, but let's how can we make it at least a little bit of money out of it. Sound good to everyone? Yep. So yes, the answer is.
Okay, thank you. Is it true you can get 100% money back guaranteed investment with options secured by real estate? And by the way, these are questions that we have coming up every day through our office.
Sounds too good to be true. The reality is there's all different option contracts out there, depends on the developer. The answer would be no. Most developers won't back it with a money back guarantee and security over real estate. But with our investor clients, if you qualify, if you're not already, but if you qualify and this is of interest to you and you qualify to be an investor client with us in our land banking projects, we issue X amount of options in the early stages of our developments, only for a proportion of it, because obviously we're not stupid. We know as a developer, with a developer on, we'd rather sell most of the land at 300,000 to a future home buyer, and only a portion of the lots at 150,000. Makes sense? Because we're going to make more retail. But we do allow X amount of investors per development, generally the early stages, get in at this, okay? And share in some of the upside. Make sense? So with our options, the answer is yes. The options are 100% money back guarantee if for some reason the development didn't proceed or couldn't get council rezoning or the DA wasn't approved after many exhaustive years of attempting to do that was unlikely, didn't happen, then the option fees are 100% money back guaranteed, and it is secured by the actual development site itself, the actual land, which we know over a period of time is likely to continue rising. Does it make sense? So that's what we're talking about. How do we maximize the upside without the headache? We know land is a solid investment if it's in the right areas. And how do we minimize the downside? They're the two things that we're working on. If you can get those equations right, then you're onto something. That sort of answers that question. Yeah.
Okay. Well, yeah, now do you just want to touch on a little bit of a quick overview of the current projects?
Yeah, these are two projects. Botanica is in a regional city called Shepparton. Some of you being in Melbourne would know where that is, 180 kilometres from here on the way towards Albury. That's a longer term option. Bendigo is one of our latest developments. I bought, who knows where Bendigo is? Bendigo is about literally an hour and 15 minutes from Tullamarine Airport, freeway all the way, great city, booming, 115,000 population, will grow to 200,000. So it's a good solid city, great. It's been a top property market for a long time. I've told my investor clients buy houses in Bendigo for years. So what I acquired there was a vineyard estate that has already an historic bed and breakfast on it, which we're converting, expanding into a resort starting next year, and a 562 housing estate. So this was launched probably 3 months ago, I think, and stage 1 and 2 is already gone in that development. Okay, stage 3 was released last week, I think. So still, the stage 3 is available. There's 7 to 12 year options starting from about 6. Some people say, how much is an option? They vary from 10,000 there, 16,000 upwards. The options vary depending on how big a lot of land you're buying. Does it make sense? So it's a much lower cost than, say, having to purchase the land. Bendigo, you want to show this very quickly?
Thank you.
And then we will announce, obviously, where our latest project is, for those who are wanting to know where that is. Obviously, the earliest stages you get into at a development is where the greatest profits are.
Welcome to the city of Greater Bendigo. Bendigo in Victoria is considered one of Australia's regional powerhouses, backed by its diverse economy and property market. It has a rapidly expanding population of 100,000, forecast to be 145,000 by 2031. With a median house price of $335,000 and vacancy rate of just 1.8% due to low unemployment, the thriving regional city is just over an hour's drive from Melbourne's Tullamarine Airport. Introducing the Bendigo Vineyard Resort and Estate Project. The development, which is predicted to be valued at over $160 million by completion, is tucked away just 7 kilometres from the hustle and bustle of the city. The existing dwelling, known as the Byronsdale Vineyard Bed and Breakfast, was originally built in the 1860s from sandstone. The Bendigo Vineyard Resort offers tourists and guests the opportunity to experience the historic and beautiful surrounds. The property features remnants of the original 1870s stables, which has since been converted into 3 uniquely quaint self-contained units that make up part of the retreat. Guests are treated to the main living quarters, which includes a large open-plan living area with premium fixtures and fittings and spotted gum hardwood floors. The bedrooms overlook rich, scenic views of the vineyard. Underneath the main residence is a brilliant cellar that conducts wine tasting offerings. Bendigo Vineyard Estate and Resort. The massive expansion will commence in 2015, with resort amenities being added to the existing estate, including a function centre, a bar, restaurant and cafe, an indoor swimming pool and outdoor jacuzzi, and more guest rooms and facilities. After this renovation, the estate will be rezoned for residential development. The unique project will be comprised of 562 lots, with a total estimated project value of $160 million. Preserving and maintaining the vineyard is of paramount importance. All of the historic architecture will remain intact. Block sizes will range from 170 up to 1,000 square metres. The project is perfect for the savvy investor who will find this an excellent opportunity to participate in the potential growth and profit that this estate presents. To find out more about the Bendigo Vineyard Resort and Estate, simply go to landbanking.com.au or call 1800 999 270 and press option 6 to speak one-on-one with one of our expert property consultants.
So tonight, if you're a red wine drinker, I think we have some here behind you, Warren. It's a working vineyard, produces wine. I used to never drink red wine until I bought the vineyard, and I thought, well, I might as well. You can't, sell a product if you don't at least drink it. So great wine. So that's a bit about Bendigo. Pretty much, you can check all that out. Each of these developments have due diligence kits, and you're welcome to grab one tonight if you want before we wrap up. So quite detailed due diligence kits. There's one on Bendigo you can grab if you see the consultants. It's time to share where our next project is. Does anyone have any guesses where the next project, the latest project that's officially being launched tonight? Does anyone have any guesses? Australia. It's in Australia. Very good, yes. You're correct. Where's that? Where? Townsville. Any other takers? Shepparton. Ballarat. Yeah, that's not a bad guess. Yeah, we'd like one in Ballarat. We are looking. By the way, if you come across any land that you think is good for land banking, email us and we'll pay you a fee if the deal works out.
Oak Valley.
Oak Valley, wherever that is. Any other takers? Okay. Yeah, Wyndham's actually a good area. Okay, would you just like me to tell you where it is? Macedon? Broken Hill? Wagga is probably a good city. We generally like to stick to cities that, in most cases, are 100,000 plus. Shepparton is the only exception to that because it's a very rich area and it's very affordable housing, which we're pushing for a fast train to go in, so that will go in. Shepparton's planned as one of those stops. But we are looking for fast-growing population centres and cities that are at the teenage stage that are really growing. Capital cities, you can do this as well, but often the challenge with capital cities, you're buying the land so expensively. So a block of land that's, say, 500,000 to triple has to go to 1.5 million. To double has to go to $1 million. Where if you can get land that you can get, say, 150,000 for a lot, for it to triple only has to go to 450, far more affordable. So that's why you sort of want to get in the market where it is lower to get that more upside. Okay? Okay, so let's play a video and let's see if this video reveals where our latest project is.
Introducing Townsville. Townsville is the largest city in regional Queensland. With a population of 234,000 and steady growth of 2.45% per year, the city is located adjacent to the beautiful Great Barrier Reef. By 2036, Townsville's population is expected to grow to 361,000. The city's strong local economy has allowed it to double its gross regional product, GRP, to an estimated $11.43 billion within the last decade. By 2030, the city's vision for its CBD is to become a hub for more than 30,000 workers and residents. Welcome to Oaks Valley Lakes Estate and Resort. The planned estate is just over 15 minutes drive from the CBD, stunning beaches, and the gateway to the Great Barrier Reef. The estate is a unique opportunity for investors who will take advantage of the potential growth of this pristine area. The estate is likely to produce between 1,000 and 1,500 lots. It will embody a resort-type environment for residents and guests to enjoy. The estate will contain an infinity pool overlooking a beautiful lake with a private beach. This unique project also presents an opportunity for investors to access 1-acre super lots. A super lot is subject to future rezoning approval, however it can be divided into smaller lots, boosting an investor's profit. For example, a super lot could increase tenfold from as little as $130,000 to $1.3 million within 10 years by simply subdividing it into 4 smaller lots. Whether you're planning to expand your property portfolio or just want your own slice of paradise, the Oaks Valley Lakes Estate and Resort is an ideal investment opportunity.
Townsville is correct, those who thought of Townsville. Why do we like Townsville? One, if you've never, who's been to Townsville before? If you haven't been to Townsville, it's worth the trip to go up there. Most Australians think Townsville's probably some country town. True? Yeah, it used to be, yeah. I'd been there 5 or 6 years ago, then I went up there recently and I was amazed how much it's grown. Townsville is a city. High-rise buildings, it's overlooking the Great Barrier Reef, Magnetic Island. It's absolutely one of the most beautiful cities in Australia, I think. You've got Sydney, Melbourne, it's 2 great cities. You know, Gold Coast is popular. Some people like Perth, but I would put Townsville right up there. I can see why a lot of families have moved there. The quality of life in Townsville is phenomenal, especially in winter. The winter weather is just, you know, perfect. But it's a city. It's over 200,000 people. It's growing to 400 or 360,000 by 2030. So we're not talking a town. You really need to go check out your country. And when you go there, you'll go, my God, you'll have a very different experience as you realise how much Australia's grown and it is growing. So obviously, it's also the Queensland government's decentralising, so there's a lot of government jobs there. The Defence Force is there. They even have an NRL. Cowboys are based there. No AFL team yet. You know, so it's a decent-sized city. Now, when we're looking at a city for land banking, we have a slightly different criteria to if you're just buying houses. Houses are more cyclical, so if you're buying houses, you look at a city and go, well, I'm going to get at the right time in the cycle. Okay. With land, you're going more longer term, so you don't have to worry about the cyclical things. But Townsville's had great growth record, and we see long term as a city, as the population continues to grow, strong economy. It's becoming a big city. We're confident about its long term prospects. What we're doing with Townsville to start with, though, is that unlike a lot of the other developments which have smaller lots, we'll only be releasing to our investor clients 1-acre lots. You've seen there in the video mentioned super lots. What super lots are, obviously 1-acre lots, but they have the potential to be then rezoned later. So I guess for those who want to make a lot higher profit, where there's an example there of let's say you got a super lot for 130,000, and then in 10 years that you subdivide that into 4 smaller lots, you could potentially, if you've got 4 lots worth, 300,000 each, you got, 1.2, 1.3 million dollars in end value. Does it make sense? So it has that extra uplift for these lots. And obviously, the reason why we're going 1 acre lots is also we can get 1 acre lots approved much sooner, where then the next level residential lots take longer, subject to council rezoning. So you can check out the due diligence kit if you're interested in Townsville. You can see the team, they'll give you a due diligence kit. But there's a lot happening in Townsville. It's a booming city, and that's why we predict it as, like Bendigo, etc., to have very good long-term prospects. And if you want due diligence kits on any of the projects, these are the guys to see.
Deepak, just come on the floor.
Any questions?
So I'll just run through the names. Jenny and Liz, could you come up as well, please? Okay, so come forward. So down. You want to say something? Okay. Sorry, I'll start at this end. Well, so Josh, Deepak, Daniel, Chris up the back, Melissa in the front, Lou Hardy, I'm sure many people know Lou Hardy, Liz, Jen hiding at the back. Just to let you know, if English isn't your preferred language, we have Mandarin, Filipino, Italian, Arabic and Hindi, so please feel free. But in all seriousness, at the end of the night, and Varun, where's Varun? Varun's over the side there. Okay, he's our property portfolio manager. And if you've got any questions for any of us and you want those due diligence kits, please come up.
It's great chatting to you tonight. I hope you found that of benefit as far as my views on the property market, why I think land banking is that next level up if you're an investor worth checking out. And if you want to see if you're qualified to be an investor client with us, if you qualify, we're welcome to have you on board. Tonight, some of you may not be aware, but also in about half an hour, we're doing the official launch of our national newspaper, which will be launching November 1st in newsagents around this country. So if you'd like to find out a little bit about that, a project I'm very passionate about and hopefully will make significant change in this country, then in about half an hour we'll have a short presentation on that, and then followed by even more drinks. So in the meantime, grab yourself a wine. We have some of our Bendigo Vineyard Shiraz here if you want to try it. It's a favourite of mine now. But feel free to come and ask any questions, happy to chat to you. And in half an hour we'll do the launch for Australia's latest national newspaper.